Firstly, I want to thank Saurabh and Chirag and Pankaj and you for a fantastic, highly educative seminar. I think there were a few comments by some investors about the long-term value fund not performing well in SIP. I'm sitting on a Bloomberg chart right now, and I can see that since inception, which is 2006, we basically outperformed the BSE 30 total return index and the BSE 200 total return index. And this, of course, is net of fees and everything else. And I think one of the important things for people to realize, I mean, I'm an investor in the fund, so I do worry when value is not doing well or when other funds are doing better or other styles are doing better. But I think the other important thing is to recognize risk, the risk taken or the risk not taken. Pankaj alluded to it, Saurabh alluded to it, Chirag's alluded to it. So returns is one thing. For example, Reliance in the same time period, since we launched in 2006 as value fund in India, Reliance has gone up by nearly 8.5 times. And our fund has gone up by over 6 times in that period. And we don't own Reliance. And all the indices have Reliance. In Reliance, we see a lot of risk. Maybe the others don't see it. We don't know in which generation or which decade Reliance's risk may or may not unwind, or our views, for example, on it may change. But we built the value fund to balance risk and return. So just comparing ourselves, and I think you should, it's a fair question, but there was a wrong, incorrect comment on the chat group that the fund has underperformed the indices. It has, that is true. And we know that period of underperformance was 2018-19, and there have been other periods when it has underperformed. The 2006-7 period, the very brief period of the brick bubble, 2006-7-8, it also underperformed very dramatically in terms of what the rest of the markets or indices were doing. So there will be periods when value, as Saurabh indicated, will not do well. But to say that we haven't outperformed the market over long run is not accurate. And you have to look at risk when also you're trying to assess a return. Right? So just want to clarify that. And again, thank you very much. And sorry to jump in, but I want to just address those comments on the chat group. Thank you. And and there was another comment linked that, that maybe we don't have faith and we're talking about equity fund of funds and ESG funds. Absolutely not. We're trying to find the best solution for long-term investors, sensible, thoughtful, long-term investors. And we're probably the only fund house that is telling you, give us equity money and we will give it to other fund houses to manage. We'll figure out which are the other styles that gives you a complete bucket, as you can see in this 70-15-15 allocation. If we wanted all your money, we would tell you to flip the allocation. We tell you, give us more for equity, give us more for ESG. We're trying to find you best in class and best in breed. And if Quantum doesn't have it in-house, we're happy to identify others who have it and act as the gatekeeper to figure out, as Chirag said, people who are not moving on luck, but on process, and have managed their funds and their styles very, very well. Just want to put that philosophy of Quantum way up there and hope it resonates with y'all as thoughtful investors. Thank you very much.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.